Welcome back to the channel. Today we'll be talking about a free strategy that beginners or even intermediate traders can immediately use as part of their trading toolkit to start becoming profitable. I call it Trend Lite, and as the name suggests, it's a trend trading strategy that uses multi time frame confluences as well as price action to determine the best time to enter markets. Now, this is a free PDF. The link is in the description below if you want access to it. So feel free to save, study, and review it as you wish. Let's get going. So, just a quick disclaimer as always, this content is for educational purposes only, so please take trades at your own risk. In this free guide, we'll be covering some fundamentals of trading, then we'll get right into the strategy and the indicators that you need, the exact entry conditions, and finally, an example as well as a sneak preview of what a professional version might look like. Yeah. So, for those new to trading or wanting to brush up on their trading skills, here are just some of my top 5 principles you should remember. Number one, develop a solid trading plan. So, this what you're looking at right now is exactly one, and feel free to use it as you wish. Number two, practice good risk management. This will save you from blowing up in the market, right? Number three, follow the trend. As they say, the trend is your friend, and it is probably one of the most predictable things, especially in these complex market. Right. Number four, always keep your emotions in check. As they say, and as you would know, trading is very stressful, and it will really test your emotions. As you become more mature in the markets, you will realize that it is actually yourself, your emotions. That is your number one, challenge when trading. And finally, number five, always learn from your mistakes, right? More often, I see traders making over trading mistakes, or letting their emotions get the best of them, having FOMO, being greedy, and all of that, right? So always learn from your mistakes. All right. So let's get right into the strategy. So don't let the name fool you, because with the professional trader's discipline and risk management, this is a very powerful strategy, right? There are 6 simple steps to execute this strategy. Just 6, right? First is we confirm higher time frame conditions. I prefer the weekly chart, especially for this trend light strategy. Number 2, then we go into the lower time frame conditions. I prefer the 1 hour. For me, it's one of the most reliable time frames. Number three, confirm the candle close condition on the 1 hour chart as well. So what we're looking for here is whether it's a bullish or bearish candle, if it's a spinning top or a doji, if it's a pin bar or hammer. So those kinds of things. It has to be a convincing candle close before we ride the trend. Number four, always determine your risk price level. You have to know at what price will you say that you're out of the market, right? Number five, confirm other conditions to mitigate risk. So one great example is to check if there's any major news that's coming up. Like in TradingView, you will see these red circles at the bottom. So for example, especially things like CPI, inflation year on year or monthly, or GDP reports, and all of that. If there are those kinds of market moving news coming up, they're usually marked in red circles, so it's very easy to spot. I suggest you stay away from the markets and just watch how price reacts to the news, and don't try to predict it, because it's really a 50-50 chance every time. Okay. And finally, once all these 5 prior steps are done, then you finally take the position. Okay. So there are just 2 indicators we will need: the Williams fractals and the Drawn Chan channels. So some of you may ask, why just 2 indicators? Shouldn't you have more? Well, is this really something that professional use? Does it work? You know what? My response to that is you have to factor in the time frames as well. If you're using one indicator and you're looking at 4 time frames, immediately that's similar to having 4 indicators. So the more you add indicators, the more exponential the complexity of your trading setup will be. And if you ask any professional, they will always say the simpler the better. They will say that price action is always king. um, and the indicators are just there to help us, diagnose what conditions the markets are in. Okay, so that's my 2 cents. You may disagree with me, but in terms of experience and also hearing from others who are very successful in the markets, the simpler the better. Now, on to the settings. For the Williams fractals, we'll just use the default settings. So let me just quickly hop on the chart here. On the left, I have my weekly chart. So I'm just using the default 2 periods for the fractals. Okay, and I'm just setting it to be, let's make it visible on a weekly chart only. And for the Donchian channels, I changed the length to 120 and the time frame to 1 hour. And the visibility is just for the hourly chart. Okay, so here on the right is my 1 hour chart. So I have it on the 1 hour chart, length 120, time frame 1 hour. Okay, got it. Let's go. Now, going back to the 6 steps I mentioned earlier, this slide is essentially a more detailed version of that. So first, we confirm higher time frame conditions on the weekly. We draw a horizontal ray on the most recent high and low fractals, and we develop a bias based on that. So if we look here, and let me just use our replay bar at this point. Okay, so I drew a horizontal ray. Let me just pull that back one more bar. Oh, there you go. So I used the horizontal ray here and here. So these are my up fractal and down fractal indicators. Okay. And by the way, these triangles are from the Williams fractals indicator. So this is where you draw your horizontal rays. So if you play that, a bit, as price is breaking there, now I have formed my bias. This is bullish now. It's breaking up a key fractal on the higher time frame chart. Now is the time to go into the lower time frame. So if we do a replay here as well, it's probably at this point. Okay. So let me just quickly hop back to the PDF. So now we go to the 1 hour chart. We check if price is broken above the Donton channels, which it has. And that depends on our bias, which is bullish. And now we confirm that the basis line is pointing towards our bias and that it's not flat. So we look here, this orange line is the basis line and it's pointing up, right? You see that? This orange line is pointing up, which is a good indicator to buy, okay? But before that, we confirm also our candle close conditions on the 1 hour time frame. We ensure that the candle has closed, okay, and it's aligned to our bias. So these are both, let's just zoom in very well, make sure these are both very bullish candles. They're not dojis, they're not, pin bars or hammers, and it's a good sign to buy. Okay, now we are ready to buy, but a few more things. Our risk price level. So normally our basis line on the 1 hour time frame is the initial recommended level for our stop loss. And we ensure that that level is 2% of our account equity. Now you can adjust this based on your experience. So for my own, preference, if I were to buy here, I do think that this is too wide of a stop. I think we have some, nominal support level here, and I would set it there because that affects ultimately our returns, right? So, for example, if we set this to a 3 hour trade, I'm looking at this gray box right here. It's saying three. That's our three reward to risk return. Essentially, the proportion of the green is three times the proportion of the red. Now, if we follow, the ideal recommendation, this kind of trade will just be, 1.5 R, right? So we can maximize our trades by, increasing our risk by tightening our stop loss, as they say, right? So that would be my preference, right? And we make sure that this red line, this price level, is just 2% of our account equity. Okay. Then we confirm, are there upcoming news? So I don't think there's, upcoming news, major news on the yen just finished, and there's none upcoming in the next day or, I think even the next week, a few days. So we are pretty much good. Um, Avoiding major news helps us avoid spike outs, a price action that taps our stop loss and then proceeds to the direction intended. So that often happens when there are major news items on the calendar. All right. So finally, we take the position. Okay. So from here, we take the buy. Then we can just, essentially watch this trade run and see if it hits our 3R objective. So let me just skip our replay. Okay. And as you can see here, if we zoom out, it actually hit and even exceeded our 3R target. So what some will do, in fact, is they would trail based on price action. So as it forms support levels, they're trailing here, and then now you can trail up to this level, getting about 4.66R, and who knows where this goes. This is real time, by the way, now. So if we leave our stop here, we're currently insured about 4.6, 4.7R, and who knows, it can go, sometimes it goes up to 10, even 20R. I've had trades go up to 20, 24R at times, right? So you have to be very picky about these trades. That's why we use higher time frame confluences before even going into the lower time frame. And if you guys notice, we didn't even go into the 5 minute charts because that's where all the chaos and the emotions really come into play. Right. So I do think this is a very, helpful, beginner friendly strategy that keeps your emotions in check, makes a lot of sense, and is easy to execute. Okay. So that's pretty much it. So I have on the PDF, just that whole example that I showed you. Okay. And if we go into some, just a few limitations of this kind of strategy, essentially the limitation is that you have missed opportunities because you are taking up a lot of time doing manual markup as we have done across, if you're monitoring 20, 40 currency pairs or cryptos or tickers, right? The beauty of trading, or for example, currency trading, is you have access to, you know, dozens of tickers, and you can choose, which are trending and which are not, and you avoid those that are not trending. And for those trending, you choose the strongest trends, right? So if you're doing all of these manual analysis for all of them, there's a huge chance you're gonna miss signals, right? So you don't have automated alerts, which is number two here. As a result of that, right, you also don't have visual tools to quickly determine your stop loss levels. You have to tend to adjust or try to do some guesswork, and you cannot monitor your running P&L. Another thing is that there's really no way to make it a more aggressive trading setup, without messing up the consistency of the setup, right? So if you have those options, that would be fantastic. And finally, again, ultimately, you may get late reactions, from this kind of free setup. But it's very good to learn. Just try to stick to a single pair for a while. You're really gonna test your patience. Choose a pair, try the strategy, and see how it works for you, right? So now, if you are, getting into the more advanced space, I just want to show you a quick preview of our Trend Pro strategy. If you want access to this, it's in the description box and also in this PDF. So this one is essentially an advanced version of what I just showed you. It doesn't use the same setup. It uses a more complex mix of confluence factors at the back, and we use AI to test the algorithms and make sure that uh, these continue to work in the markets. So automatically it feeds you signals, as you can see here. There's a buy signal. It recommends the stop loss level here at the green line for a bullish bias, right? And still, you can customize this on your actual trade by tightening it further. And the great thing is you can monitor your trades as they progress. So currently, this one is running 1.1 reward to risk as of April 21st, um, guaranteed, right? Um, and yeah, imagine if you can stick this on to 20, 30, 40 currency tickers at the same time. and set alerts for all of them. So you just get fed the specific signals on your watch. And for example, it's a trending day, right? And for example, you have Swiss yen, pound yen, dollar yen, all trending, all giving signals. Then you choose which one, you ask yourself which one delivered the signal earliest. And automatically you would know that is the strongest trend and that is the trade to take, right? So if you're interested, again, feel free to check it out. We have links in the description below for the full access. But if not, again, feel free to use this free strategy, the trend light strategy. And I hope in this very short video that you're able to learn something new on how to, essentially create a setup for yourself and how to manage risk, as well as managing your emotions in the market, right? Which is very important. So, again, I hope you learned something, and I'll see you again in the next one. Bye bye.